Welcome to the What Bitcoin Did podcast.
Hello there, how are you all? Welcome to the What Bitcoin Did podcast, which is brought to you by the mighty Kraken, the best place to buy, sell, and trade Bitcoin. I'm your host, Peter McCormack, and today I have part 4 of my Bitcoin Beginner's Guide, and I've got an interview with Stephan Livera, where he answers the question, what is Bitcoin? But before that, I do have a message from my show sponsors. So, firstly, today's show is brought to you by Dropbit, the only mobile wallet I use for sending and receiving Bitcoin. Have you downloaded it yet? Have you tried it out yet? I love the Dropbit wallet. I've been using it now for nearly a year, and they delivered on every promise they made. They said, Pete, Dropbit, it's the Venmo for Bitcoin. It's going to be the easiest way to send and receive Bitcoin with your friends. And they did it. They crushed it. They made it so easy. When I first got access, I could do all the normal shit with addresses and QR codes, but they also had this ability to text Bitcoin to your friends, which is pretty cool. But then they brought in the ability to tweet Bitcoin to your friends. You can literally send Bitcoin via Twitter, and I did it. I sent Donald Trump some Bitcoin. He never claimed it, but I did it. I managed to send Donald Trump some Bitcoin. They also added support for the Lightning Network, and they've added the ability to buy Bitcoin from within the app. So many things in Dropbit. Come on, time to download it. If you've not got it yet, go and check it out. It's available for the iPhone and Android. Just head over to dropbit.app, which is dropbit.app. And also, today's show is brought to you by Kelman Law. I know if I get myself into some Bitcoin bullshit, then these are the guys I'm going to be calling. Kelman is run by 2 Bitcoin OGs based out of New York. And unlike other crypto lawyers you find online, these guys literally understand Bitcoin and fintech. And of course, most importantly, you can pay them in Bitcoin. One of the partners, Zachary Kelman, is known for drafting a bill submitted to US Congress in 2014 aimed at exempting on-chain Bitcoin transactions from US regulations. The other founding partner is brother Daniel Kelman. You might recognize his name. He was on my series about Mt. Gox, helping me understand some of the complexities around civil rehabilitation. Their team is staffed with lawyers with expertise in litigation, dispute resolution, anti-money laundering, and US and international corporate structuring for fintech businesses or companies that have individuals operating in the Bitcoin space. So come on, if you need a lawyer, an expert lawyer, if you're working in Bitcoin and you want an expert, badass lawyer, you need to speak to Kelman.law. So you can email them on info@kelman.law, which is KELMAN.law, or head to their website, which is kelman.law. Okay, so on to the show today, and we have part 4 of my Bitcoin Beginner's Guide. And to answer the question of what Bitcoin is, I have my buddy and fellow podcaster, Stephan Livera. Stephan has become a good friend of mine over this last year. We're always talking about what we're doing and helping each other in the background with ideas. And when I needed someone for this show, I reached out to Stephan. I was like, come on, man, can you help me out? Stephan was like, yeah, got you covered. And while putting together a list of shows for the Beginner's Guide, some were really easy to decide on, but the question of what is Bitcoin is quite tricky to answer because it can mean so many things to so many different people. You could be someone like me in the UK who bought some Bitcoin, stuck it on a ledger or Trezor and sat on it for a few years, using it purely as a speculative asset. Or you could be someone who's bought Bitcoin with their Venezuelan bolivar and is using it as a tool to either protect their wealth against hyperinflation or get money out of the country without it being seized. Or you may just be a merchant looking for a different way to accept payments. Bitcoin offers so many different options to so many different people, so it's very difficult to define it as one thing. But the consistent thread in Bitcoin, no matter how you use it, it is entirely up to you. You don't need permission, you don't need to trust any third parties, and no one can censor your transactions or seize your Bitcoin. That is what makes Bitcoin so powerful. So Stephan and I dive into this. We get into why the permissionless, censorship resistant, and trustless nature of Bitcoin is so important. Now listen, if you're a long-time listener or you know Bitcoin, you might want to skip this one. It might be a little bit too basic for you. And if you are a beginner, you might find this a little bit complex. Just bear with it. The next step is to go and play with some Bitcoin. Anyway, we've covered the basics as simple as possible. But if you've got any feedback, if you do want to reach out to me, my email address is hello@whatbitcoindid.com. Hi, Stephan. Happy New Year. How are you?
Thanks, Pete. I'm doing great. How are you?
Really good, thanks. Really good. So thank you for agreeing to do this. As you know, I'm doing a beginner's guide to Bitcoin. I've done 3 shows so far. I covered why people need Bitcoin. I covered what money is, and I've now done a bit of the prehistory with Aaron. We looked at BitGold and eCash and all the precursors to Bitcoin. Now I want to get into explaining to people what Bitcoin is, but hopefully we're not going to go too deep. I just want people to get a light understanding of what Bitcoin is, so if they've got an interest, they can learn a bit more. So you cool with this?
Of course, let's do it.
All right, cool. So the white paper drops in 2008, 31st of October, my birthday. I was actually in Vegas. I think I've already mentioned this. And then on January the 3rd, 2009, the protocol drops. Bitcoin drops to the world. But what is it?
Right. And this is a very... You can go a long way with this, but the short answer of it is this was Satoshi's statement, his proposed solution to this idea, and it was a multi-decade process. And this was there was a build-up to this, as you covered in your earlier episode with Aaron. And so this was essentially, at that point, it was disclosed mainly to the cypherpunks, right? So these are like cryptographers and privacy activists. And at that point, then I think some of the initial interaction, it wasn't like huge, right? Because it's one of those things where there were lots of attempts, right? And so I think it wasn't like, oh, this is it, we know this is the one, right? It sort of took some time. And so then I guess if we sort of advance forward to early January, when Satoshi, the pseudonymous creator of Bitcoin, started the Bitcoin network. Right, and so he or she or whoever started running the software, right? And then very soon after that, Hal Finney, another legendary cypherpunk, well known, and much of his work also went into Bitcoin, such as proof of work. And so that's where the network really started. Obviously, this was very much all before my time, right? So I've just sort of learned this just from hearing from people in the Bitcoin community and just reading. And so in those early days, it was very much like cypherpunks, privacy activists, very like computer programmer nerdy types, and a few libertarian types as well later on. Yeah.
And so Bitcoin drops itself. You can ask people and they'll say different things. Some people say Bitcoin is money. Some people say Bitcoin is gold. Some people say it's a financial protocol. Trying to get a new person in, not having a kind of clear and distinct answer can be quite complicated. I tend to think it can be all three of those things.
Right. And yeah, so I think of it like I think the framing I like best is digital hard money. And a hard money is a money that's hard to make, right? So it's not an easy thing to make. And I think the other part that's really crucial to understanding Bitcoin is to think of it like a savings and a payment technology in both ways. And it's like a really advanced version of that, but in some ways it can also be seen like a savings and payments technology of last resort, right? So when you can't make a PayPal or a credit card payment or, Bitcoin is pretty much always there and it's always running. And so that's another way to think of using Bitcoin. It's something that you can use and it's been designed in such a way that it's just so hard to stop that you can use that as your last resort if everything else has failed.
Okay, so let's go really super simple then. Let's keep it easy for people. Bitcoin is a form of money. It's a type of money. And Bitcoin itself is also a protocol. So let's separate what the two are, because unfortunately, the currency is called Bitcoin and also the protocol is called Bitcoin. So let's start with the currency, Bitcoin itself. What is it made up of?
Right. So you're right. There's two parts to it. And so the currency of it, the token, if you will, you can think of it like how we've got dollars and cents. We've got Bitcoin and Satoshis, right? And every Bitcoin is divisible down to 100 million Satoshis, or in the community we say sats, right? And so this money, if you will, has been designed with a hard cap in mind. And so there will never be more than 21 million Bitcoins.
Okay, so if I have Bitcoin, essentially I've got Bitcoins and Satoshis, like dollars and cents. It's a type of money that's denominated in that way. And I guess if I want to use it, I can use it on my phone or my computer. But when I'm using it, is this when I interact with the Bitcoin protocol?
Yes, that's right. And what you would use to do that is something like a Bitcoin wallet, right? And so an example that you might do is you might have some Bitcoin on your phone and you might be buying something from somebody in person and they might hold up a QR code to scan, and then you might scan that with your phone, and then your phone will read that and say, oh, okay, would you like to pay 0.01 Bitcoin to Peter or whoever? And then, I would scan that and I would press send. And then what's happening in the background is my phone is acting with a Bitcoin wallet application on my phone is acting like a interface with the Bitcoin protocol. And in order to do that, it's creating a transaction and it's sending that transaction across the Bitcoin network from me to you in that example.
Right. So similar, if I have a PayPal account and you have a PayPal account and I want to send you $5,000, I just log into my PayPal, I look up Stephan, I send $5,000, and if off it goes to you. With Bitcoin, I have a wallet, and if you have a wallet and I want to say send you, I don't know, half a Bitcoin, I then just put in your address and it does it the same. Or is there something different going on?
Right. Great question. Right. And so there are a few differences there with PayPal, because PayPal is, think of it like they are maintaining a central database of who has what. And fundamentally, the unit that's being transacted on PayPal is different. So, for example, you might be sending me pounds or US dollar. Whereas with Bitcoin, it can be a little bit confusing because Bitcoin is the payment network or the protocol, and it is also the token, the unit. And the other part that's different with Bitcoin is it's intended to be like a peer-to-peer cash, right? Now, that means that you're not trusting a third party. So in that PayPal example, you and I, we're both trusting that PayPal will not censor or stop that transaction. Whereas in the Bitcoin world, it's much more difficult for that to be stopped, because it's just basically you're running this software and I'm running this software, and we use it to just send to each other.
Oh, okay. So with PayPal, when I choose to send $5,000, I'm telling PayPal and they're updating the database they've got and they're telling you, and then you know. But with Bitcoin, it's different because there isn't a PayPal at the center.
That's right. And what is actually happening is Bitcoin users, when they run their Bitcoin software, they are keeping their own ledger of the transactions of Bitcoin, and that's what this idea that we call like trust minimization. It means I'm not having to trust PayPal. I'm actually checking that using my own Bitcoin software that checks the rules of Bitcoin and checks that, yes, that is a valid transaction that Stephan was sending to Peter, for example.
Okay, so I get it. So PayPal has this central database and we tell them and they update it. Whereas this one, there is no PayPal. We all hold a copy of the database. So you have a copy, I have a copy. And when I make a payment to you, it updates my version, it updates your version, and updates everybody else's. So everybody carries an identical copy of this ledger.
That's right. So everyone carries a copy of the ledger. And I suppose one part that might be a little bit confusing is that you don't necessarily know who is behind what address in Bitcoin. But fundamentally, that's right. It is a little bit of a mind shift, but once you get used to it, it's actually really simple. Once you get started, right? And so that's why typically when a more experienced Bitcoiner is, trying to teach a new Bitcoiner, they might just start them with a small transaction just to see what it looks like. And because once you get started with it, that's really when it feels a lot easier.
Right, okay, so the protocol is essentially the software that runs Bitcoin. We can all download it and use it if we want to, or we all can interact with it. But everybody who downloads it carries a copy of the full ledger.
That's right.
Great. Okay, I'm getting my head around this. Stephan. Okay, so let's talk a little bit about the protocol. I've heard about this thing called the blockchain. What's the blockchain?
Okay, so think of it this way. Transactions in Bitcoin are put into a block. And then the blockchain is literally a chain of blocks. And so the cool thing with Bitcoin is that it uses some of this fancy cryptographic, maths or magic, if you might want to think of it like. And what it does is it chains these blocks in such a way that it's hard for us to bluff each other about what was the true state of that ledger or the history of Bitcoin. And so the way Bitcoin works is that each block builds on top of the other, and that there's a increasing block height. So, the first block, etc., each block builds on top of the other. And each part of the mathematics of it is that each block contains what's known as the double SHA-256 hash of the previous block. And so what it does is it creates this overarching system that's in some ways hard to compute but easy to verify. And so without going too much into the detail around like mining and so on, maybe we can do that after, but the basic idea is that the miner might expend a lot of energy trying to mine the correct block in what we might think of like a lottery system. But then each Bitcoin user, when they're running their Bitcoin node in their software, it's very quick for them to check that it's correct. And so the analogy often used here is like Sudoku, right? So when you have a Sudoku puzzle, it's very difficult to first solve it. But if somebody hands you the solution, it's very quick for you to check, oh, yep, that's the correct solution to this Sudoku puzzle.
Right, okay. So basically the blockchain is the records of all the transactions. So when we talked about spending, sending money to each other, they exist in these blocks. And it's like every 10 minutes, a block is created and it's hard linked to the previous block, so it can't be undone. So everybody can trust it.
Right, and that's what we call, that property is known as immutability. And so the concept there is, as has also been explained, is like amber. It's like the more amber that gets formed around it makes it more and more difficult for somebody to go back and try to rewrite history. And so I guess let me explain, like, why are we doing this? Why is there this really complicated system? Why can't we just use a normal database? Well, the problem in Bitcoin that we're trying to solve is, how do you make this system trust minimize? How do you make it so that it can't so easily get shut down, right? So let's say big government or a big business wants to go and tamper with the ledger. And then if they took that ledger, let's say we trusted one person, but then the government or the business, someone, or some bad person goes and takes that ledger away, then how would the rest of us know which one was the right one? Well, that is why. Right. So that's this concept of us coming to what might be called consensus, or like in a distributed way, not in any kind of way that, the head can get lopped off, right? So your listeners might be thinking of, say, BitTorrent, right? So the idea is, well, BitTorrent, when people use BitTorrent, they're all sharing that file. So you can think of Bitcoin there's some parallels there with BitTorrent, because we're all sharing that ledger around with each other constantly. And then when we see a new update to that ledger, you and I, our Bitcoin nodes, will share that information with each other. And then we sort of say, oh, have you got the latest transaction? Oh, have you got the latest block? Oh, here it is. Here you go. And then we have to sort of all agree on what's known as the state of the network, or what is known as the ledger that we are all transacting on.
Right. So it's almost like everybody who's part of the network works together to keep it honest, to ensure that everyone's got the latest sets of transactions. Okay, so that makes sense. What stops somebody cheating it?
That's a good question. So part of that is your full node your Bitcoin software has certain rules that it is checking, and it will not accept a transaction or a block if they are not valid by certain rules. And this comes back to some of that cryptographic mathemagic, if you will, as we were talking about earlier. It's checking that certain rules are met. And one of those is that this comes down to hashing. So one way to think of hashing is like a fingerprint, right? So you'll always produce the same fingerprint, but it's extremely hard to find another person with that exact same fingerprint. And so you can think of a digital, kind of like a digital analog of that, right? So if you have a certain file and then you run a hash function on that, it will always produce the same result. But if you change the first part, the pre-image, like the part before you've run the hash on it, it will change the end result dramatically. And so that is one concept that gets used within Bitcoin to make sure that the same input will always produce the same hash. And then that hash is always of a fixed size. And then basically brute force trial and error is the only known way to get that. And that's part of how we know that it was difficult for the miner to correctly find the proof of work for that. And then there's other certain rules like most accumulated work. So there's certain rules that basically the Bitcoin network uses to come back to consensus if there is ever a split.
Right, so I get it. So everybody who wants to be part of the network can download the software. Everybody has the software that's running the same set of rules. So you can't cheat the system because we've all got the rules. And then if I want to make a payment in the system and I broadcast that payment, everyone gets broadcasted that payment. So everyone is aware of it. And then all those payments every 10 minutes are locked up into a block, securely put away, and then we start again.
That's right. And that process happens on average every 10 minutes. And then that is just an ongoing process, a never-ending process.
So the blockchain is also, it's like a chronological history of all transactions.
That's correct. So if you download Bitcoin and run Bitcoin today, it will have all the transactions all the way back to what we call the Genesis block, the first ever block in Bitcoin in like early January 2009.
So somebody listening right now, Stephan, might be going, what the hell? I just came to learn about digital money. You've talked to me about proof of work. You've talked to me about nodes. You've talked about all these crazy things. This is really complicated. I don't know what's going on. I always think a good starting point is go and create an account, go to a Kraken, go to a Coinbase and buy your first bit of Bitcoin and then download a wallet. And once you've got a wallet, once you move from one to the other, that's almost like your starting journey to get a feel for what this is. How do you feel about that?
Right. So I think it's all part of the journey, and you might go to a Bitcoin meetup, or you might have a friend who is into Bitcoin, and they might set you up with a small mobile wallet. And so that's one way to interact with Bitcoin. And you might buy a small amount of Bitcoin, or maybe they'll just give you, $5 worth, or just a small amount of Bitcoin. And that is a typical way that people get started, just by understanding, okay, this is how I receive a Bitcoin transaction, and this is how I send a Bitcoin transaction. And at the start, you don't need to worry too much about the details of like, oh, what is a node and how does mining work and blah, 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 right? You can just start with a basic app, and then over time, you improve your knowledge on it and just build that knowledge until you get to the point where you know how to run the Bitcoin software for yourself.
So don't get scared off. Go and buy a little bit, have a play with some wallets, and then just start going down the rabbit hole. Okay, that's great advice. So we talked a little bit about this protocol. Who manages the protocol? Who's in charge of it? What stops somebody going in and writing some a little hack into the code so they can steal the Bitcoin?
Yeah, great question. And so Bitcoin is an open source protocol. That means all the code that is inside Bitcoin Core and Bitcoin is open source, meaning anyone can see it. And that means anybody can also contribute to it. You may propose your own improvements, or you may propose a change to the code of Bitcoin. And because all the discussion happens out in the public, so you can literally go to github.com and see the code for Bitcoin. You can participate in the discussion on IRC. You can participate in the discussion on email mailing lists for Bitcoin. And there are also other forums as well where people will discuss about Bitcoin, and conferences and so on. People write papers and so on. Now, to your question about could somebody try to steal the Bitcoins? Well, this is where the importance of review comes in. So Bitcoin doesn't just accept any code change at all, right? It requires going through certain processes of review. And so before a software developer can successfully put their change into Bitcoin, it has to go through a review from other members of the Bitcoin community, and then a Bitcoin maintainer has to actually merge that change in, basically meaning accepting that change to the code of Bitcoin. Now, it might sound a little strange to listeners who are not used to the idea of open source, but basically it just means all the discussion happens out in open. Anyone can make a contribution, but it's not that all contributions are accepted. It's that there is review and there's testing and so on before any serious changes are merged or accepted into the Bitcoin protocol.
Okay, so a little bit like how when we were doing payments, we all had a copy of the software, we were all kind of trusting each other and working together to ensure that all payments are secure. A similar thing's happened on the back end. It's like there's a group of people working together to keep the code honest.
That's right. And there are differing levels of competence, right? Like not everyone is a developer, right? I'm not a developer, you're not a developer, but we might have friends who are developers, or we might pay someone who is a developer to review code for us, or we might participate in the discussion and see from what other people are saying. And so in that way, users of Bitcoin also have a say in what Bitcoin becomes. Because it's not just a developer they're not the benevolent dictators, right? Because ultimately, developers can create some code, but users don't necessarily have to run that code. And so sometimes there's a little bit of an aspect of building agreement or building support for a change. And that's something that we have seen in Bitcoin for the larger big changes. Right? Now, for small, low-level changes that aren't that important, those can sort of just happen in the background, or not so much kind of in the background for the average user. But if it's a big, important change, what we call a change to the consensus of Bitcoin, then it requires a lot of review from not just the developers, but all the kind of parties in the Bitcoin ecosystem, if you will, right? Like miners and exchanges and payment processors and merchants and users and developers.
Damn, it sounds complicated. So, okay, the next thing, I'm thinking, right, Stephan, I like this Bitcoin. I'm going to get myself some. I'm going to have a play with it. So I go and sign up to an exchange. I've been told the exchange is where to buy them. And then somebody said to me, oh, you need to store your Bitcoin in a wallet. So what's a wallet?
Right. So a wallet, think of that as an application that manages your Bitcoin for you. Now, in Bitcoin, one way to think of it is like a keychain, right? So you have multiple addresses, and you can think of that like having different accounts, right? So every time you want to receive Bitcoin, your wallet will generate a new address. Now, in the background, your wallet manages this for you, but it has a key associated for that address. And you can think of it like if somebody gets that key, they can spend your Bitcoins. So that's why it's very important that you keep your keys secure. And so think of it like there's lots of addresses, and your wallet manages like a keychain of all the keys that are associated for those addresses. And then the way the Bitcoin network works, or the way the rules are set, is it's kind of set like the person who proves that they have access to the key, and typically that's done with what we call a digital signature. And that digital signature is sort of like a way that you can prove you hold the key for this address without necessarily telling the world the key, because obviously now they could spend from that address too. So the way it works is your wallet manages all that in the background for you, such that when you want to spend, it picks, okay, I want to spend this coin to Peter or whoever, and here's the key, and it will sign that transaction, and it will broadcast it to the Bitcoin network. And that's that process then, the gossip process, where all the Bitcoin nodes talk to each other and say, oh, have you got all the transactions? Here's the transactions.
Okay, so a wallet is where I keep my Bitcoin. I can have separate addresses, so like separate accounts. So a bit like I have my savings account and I have my current account, I can have different Bitcoin addresses. And it sounds to me like the key is like a master password for each address.
Right. So the typical, okay, we don't need to go into the technical aspects of it, but think of it like you have a master key.
Yeah.
And this master key gets you access to all of your Bitcoin that's held on that particular wallet.
Okay.
And so that master key gets you access to all the different addresses. And that is the thing that you need to keep backed up, and that's the part that you need to keep a secret, obviously. And that's, it's an imperfect analogy, but people might think of it like a banking password kind of thing. Once somebody gets that, they can get your money. So be very careful with that, and that's where you've got to take security precautions.
And when I first get started with Bitcoin, when I start playing around with my first wallets, will I actually have to use that key, or will it all be done for me?
So the wallet manages the key for you in the background, but you may need to log into that wallet. So there might be a PIN code to log into that wallet, but that's not necessarily the same thing as the key. And that's where some people who are new to Bitcoin, they fall down or they fall into a trap where they haven't kept a backup of that key. And so typically that is 12 or 24 words, and we call it like a seed, a 12 or 24 word seed. And they need to keep that seed backed up, and potentially a passphrase, which you can think of like the 13th or the 25th word on your seed. And so typically when you set up a wallet, it won't always be at the very start, depends on how the wallet was designed. They will give you that 12 or 24 word seed, and you would normally write that down, and you would keep that in a safe place, or you might even keep that on a metal backup. But that's basically think of that like your password, or that's your seed.
Okay, so I create my wallet. It has this master key that allows me to log in and send and receive Bitcoin from the various addresses. But also you're saying I need to back up that and hide it away in case I lose it. But what if I lose it? Like, can I use my restore password? Will there be a restore password button?
So that is one of the big differences with Bitcoin, is that there are no bailouts in Bitcoin. And so that is why it might be a little bit scary at the start, but we have to learn to basically advance our knowledge and our personal accountability. And so this is one area where if you do not back that up, and if you don't back up if you've got a seed and if you've got a passphrase, you need to keep those backed up. You absolutely must, because if you don't, that's a common trap. And what happens with Bitcoin is if you lose the seed and or passphrase, you basically lose access to that Bitcoin. So it's basically like those Bitcoin will get trapped in the ledger forever, because no computer is strong enough to crack that password. So that's kind of a simple way to understand that.
Next up, I talked to Stephan more about what Bitcoin is and how it works. But before that, I've got a message from my amazing sponsors. And first up, we have the mighty Kraken, the best place to buy, sell, and trade Bitcoin. And I say this every week. But why is Kraken the best? Well, firstly, they've got the most secure exchange out there. Safeguarding your funds and protecting your privacy is their number one objective. They also offer additional layers of near real-time, hyper-personalized support through the Kraken account management system. And they have got a suite of trading products that no one can compete with. Firstly, they've got Kraken.com, where it's the best place to trade. You can supercharge your trades with up to 5x leverage. You can access up to the second pricing data with cryptocurrency indices powered by CF benchmarks. You've got next level trading with Bitcoin futures. The OTC desk offers deep liquidity and private and more personalized service. And they've just launched Kraken Pro, a beautiful mobile-first app so you can trade Kraken on the go wherever you are. There is no better place to trade Bitcoin. You want to find out more? Head over to Kraken.com or download the app, which is available for the iPhone and Android. Just search for Kraken Pro, which is KrakenPro. And also, today's show is brought to you by the amazing BlockFi, the future of Bitcoin and financial services. My oldest sponsors, some of my best friends in the industry. Love these guys. And what an announcement to kick off the year. BlockFi is launching a BTC rewards credit card where you can earn Bitcoin cash back on your purchases. I cannot wait to get this. Come on, Zach, hook me up. Get me this as soon as possible. They've also got a mobile app coming, and they've launched support for USDC and Litecoin. This is all on top of their market-leading crypto-backed loans and their interest accounts for Bitcoin, Ether, and GUSD, which I am a customer of. 2020 is going to be massive for BlockFi. I know they're going to crush it this year. I know we're going to be working together all year. Make sure you go check them out. Head over to blockfi.com, which is BLOCKFI.com. So one of the early things I'm going to have to do is go down the security rabbit hole, learn a bit more about security, how to protect my Bitcoin. Yeah, there's a lot to learn here, but still, okay, I'm in. I've got my wallet. I've got my Bitcoin, Stephan. I'm going to play with it now. So I want to send you some Bitcoin. How do I do that? What do I do? Okay,
so there's a few different ways. I might show you a QR code, and you might scan that with your phone, and then your phone will read that and say, okay, it's 0.1 Bitcoin or whatever, and then press send. Another way is I could copy-paste an address. Now, nowadays, that will look something like a string of letters and numbers, and it might start with BC 123X, whatever, right? It'll be like 20 or 30 characters, whatever. And I could paste that to you online. And you could also pay a set amount of Bitcoin. But I guess one part here that you've got to be wary of is Bitcoin is its own unit, right? So it might be a certain number of Satoshis. But because the exchange rate is fluctuating over time, that can be a little confusing for people who are new because they haven't quite grasped that Bitcoin is its own unit of account. And so what might first be $10 worth of Bitcoin, let's say the price fluctuates, and now that's actually worth $11. And so that's a little part that you'll have to just get your head around. But once you do a transaction or two, you'll start to get used to that idea.
Okay, so I kind of get it. You're going to send me either a QR code or a string of characters, and I'll put that in my wallet to send to you, and then I'll click send. And do you get the money straight away? Does the Bitcoin come to you straight away?
Okay, so what happens there is your Bitcoin transaction gets broadcast to the network straight away. So everyone on the network can see it, but remember that Amber concept? That only happens once every 10 minutes, and that is what we call a confirmation, or aka when a miner finds a block, or in this lottery system, in this kind of decentralized lottery system, and they include your transaction into that block. Now, there's a few other complexities around it, things like the fee rate and so on, but for now, I think it's simple to just say your wallet deals with that, and so your wallet includes the fees and so on, and then on average, every 10 minutes, a new block is found. So most of the time, if you're lucky, your transaction will get included in the very next block. But if not, don't fret, because it just might mean it's still waiting to get confirmed. And that might take another 2 or 3 blocks, or who knows. But that's kind of the short way to think of it. And then on my side, on the receiver side, I have to be careful that I don't just take a Bitcoin transaction incoming without also waiting for a confirmation. And so I would normally have to wait until your transaction has actually been included inside a block, i.e. it's been confirmed, before I may now spend it onwards. Until then, I need to wait because that's part of Bitcoin's security.
So you're essentially waiting for the amber to lock around the transaction, like you said before, lock around it, make sure that's a confirmed transaction, it's real and it exists.
That's right, because up until that amber has locked around it, in this analogy, I don't have it for sure. Because there are some attacks that can be performed. Now, again, most of the time your wallet will deal with this for you. Generally speaking, you just wait for a confirmation. Now, depending on the amount as well, right? So if you're just receiving a small amount of money, then okay, one confirmation is probably fine. And even in very low amounts, you might even take a 0 confirmation. But generally speaking, that's not the practice. And then for high amounts, like if you're spending like $100,000 or something like that, then you normally want to wait more confirmations, right? You might want to wait 4, 5, 6 confirmations for that kind of money.
Okay. It's still very complicated, lots to get through here, but I'm interested. Okay, it seems kind of cool, but why do I really want to do this, Stephan? Like, why should I care about Bitcoin? Why do people actually care about it? Because, when I use PayPal or use my bank account, I don't have to think about this. I log in, I put your email address in, I send you some money. Or with my bank account, I log into my bank account and I can send you some money. And if I make a mistake or somebody steals that money, I can get it back. Bitcoin is like this, all this complicated stuff I've got to understand and I've got to learn. If I make a mistake, I lose it all. So why should I do this and why are people doing this?
So, yeah, great question. And so it comes back to 2 points, I would say. So it comes back to that idea of it being a better savings technology and also a better payments technology. So there's 2 parts to it. So let's talk about the payments part first. There are some people who don't have access to PayPal or credit cards, or they've been deplatformed or debanked. Those people basically have to use something like Bitcoin because it's much harder for them to use cash, over the internet, obviously. So that's one way that they are able to still accept payment for their services, and this can happen in different scenarios where somebody's been, say, kicked off social media, or maybe the payment processors don't like them, or for whatever reason they've been debanked. That's one part of it. And then the other part of it can be thought of a little more difficult to think of in the short term, but it's more like a longer term aspect of it, where people who buy Bitcoin and over the longer term, when they have really taken a long time horizon on their purchase of Bitcoin, they've been up in purchasing power terms. And part of the reason for that is that, now again, this is being honest and being open, this is speculation, right? So this is basically you're speculating on future adoption of Bitcoin and also speculating on this future value of Bitcoin relative to other forms of savings that you could have held. And so in some ways, there's kind of like a hidden tax of inflation, where if we keep, if you keep pounds in your bank account, or I keep Australian dollars in my bank account, over time, the amount that I can purchase is going down. And so,
why is that?
Right. And so because we have a fiat money banking and money system, and fundamentally what is done by that is we have, so without going too much into the detail, governments have created central banks, and they've created a banking infrastructure that creates inflation. So, for example, when a commercial bank creates a loan in a fractional reserve banking system, they are actually loaning new money into existence, ex nihilo, just out of nothing. And so what that does is it causes what we call the Cantillon effect. And what that means is the person who's getting the new money first is the winner, and the person who's getting that new money, by the time it's flowed out to everyone else, they are, in this sense, the losers, because they are spending at today's prices with kind of yesterday's purchasing power. Whereas if you are the bank, or you're the person getting the loan from the bank, you're getting the new money first. So you're getting to spend it first, and you're getting a benefit out of that. And that causes this systemic impact to the system, which continually devalues all of our money. And then the other factor to lay on to that is typically there are capital gains tax laws in most countries. And so when you buy an asset or you buy a house and the value of that goes up, part of that value going up isn't really like real value going up. It's actually part of that is just inflation. It's just going up because of inflation, but then that's getting taxed away because that's getting added to your tax return at the end of the year. So in that way, people can think of Bitcoin as a kind of savings outside, sort of independent of the mainstream banking system and independent of the government. And so it can be, people can speculate on that with a percentage of their investment, or if they want to regularly accumulate, right, known as dollar cost averaging or stacking sats, as we say. These are ways that people try to accumulate a position in Bitcoin, and they do that typically because they have a future bullish belief on Bitcoin. And this has sort of proven out over the history of Bitcoin is that there are people who bought at a high and then lost money, but typically there weren't that many people who bought at that high, and typically the people who held for a long enough time eventually got out into the positive. And so again, that is a speculation, right? So we should be upfront about that. So it's two prongs, right? So it's a savings technology and a payments technology that are difficult for somebody to stop you. And that's kind of one of the powers or special things about Bitcoin.
All right, okay. So this is when we talk about magic internet money, then the money that just goes up in value. So what the speculation is we're speculating that Bitcoin will continue to grow. More people will want to use it. More companies will want to accept it. And as more people use it, there is a higher demand for the Bitcoins that are available, and therefore the value of Bitcoin goes up. But where Bitcoin, you're saying, is different from government money is that you can't print anymore. So there still will only ever be, there's 21 million. Therefore, that's why it is a speculation on growth.
That's right. And so right now, today, as we record this, the number of Bitcoins outstanding is something like 18.1 million or something in that region. And most of the Bitcoins that are to be issued have already been issued, right? And I think it's in the maybe early or mid 2030s when 99% of Bitcoin supply will have already been issued or already been created into existence. And so that last 1% is getting mined or created from that time in the mid 2030s all the way to 2140. Right, so part of that is just to understand exactly how scarce Bitcoin is, right? Because there'll never be more than 21 million, and there's more than that number of millionaires in the world. So if every millionaire in the world wanted one full Bitcoin, they couldn't get it. And so that is part of why many of us are very bullish on Bitcoin, because we see it as something that's strictly scarce, and not just that the amount of incoming supply every year is very scarce.
Okay, so that's the speculation covered, but the speculation is linked to use. And what we are saying here is people might want to use it. Some people who can't get access to banking services, or some people who want to send money internationally. So I've got actually a good example right now. I have some money in my PayPal account, and it's locked, and it's been locked for a week as they want to verify something. So I can't actually use that PayPal money. So if I wanted to send you some money now, Stephan, I could use Bitcoin. What are the advantages of using Bitcoin right now to send you money over, say, my bank and PayPal?
Well, Bitcoin is designed to be a more permissionless system. And that's the key part that I think you're hitting on there, which is that banks and PayPal have to comply with a whole swathe of government rules around financial controls, right? Things like AML and sanctions and so on. Whereas the Bitcoin network is not subject to those. Like if you're directly using Bitcoin, you just basically scan the address, you pay it, and off you go. So in that way, it's designed to be very open, permissionless, and what we also call censorship resistant. It's there to stop censorship of transactions.
Right, okay. Well, it sounds pretty cool. Are there any disadvantages? Are there any, what are the disadvantages of using Bitcoin?
Well, yeah, so look, part of it is, again, the security of it. It can be difficult to secure. It can be a long journey to learn how to use it correctly and safely. There have been hacks of people who have not held their Bitcoin securely. There have been people who have not held their backups correctly. There are risks around things like if the miners were to attack the network, or if somebody were to try to attack the network. Now, for the most part, the incentives of the system are designed in a way to stop that kind of attack, and it sort of makes it more that people who want to, it's better or more profitable for you to just legitimately participate in the network than to attack the network. But it, truthfully said, it is a risk. And so those are some of the key risks. Some people say things like, oh, the government would ban Bitcoin. I think that's unlikely, but it is a risk. I just think it's extremely unlikely.
Right, okay, cool. So the next thing I'm going to recommend people do, Stephan, is, we're obviously asking these questions like neither of us know, I don't know anything, and I've got a bit of experience, but one of the things that was very difficult in the early days is, whilst people say Bitcoin doesn't have a community, there is a group of people who are interested in Bitcoin, and they seem to have a kind of set of shared values. Now, I know it's not a prerequisite to buy Bitcoin and be involved in Bitcoin to have these shared values, but they still exist. What are the kind of things that Bitcoiners care about? Why are these people kind of on the same page? What are the important things that Bitcoin is doing?
Right. So I think there's fundamentally a commitment to things like 21 million cap. Right, so that's like a very important thing within Bitcoin, that people don't want any inflation beyond the 21 million. So that's one thing that everyone's really committed to, or most people are committed to. They're really committed to this idea of censorship resistance, right? This idea that payments should not be censored, and that's something that people try to preserve. They are also, in some sense, conservative. They are very careful about any changes to the Bitcoin protocol because they rightly see this like this is a very long-term project. This is like civilisational infrastructure that we're building here. We have to be really careful, right? It's like, it's just like a really mission-critical sort of software. Another value of Bitcoiners is, and it's valued to different degrees by people, but privacy is another aspect as well. So there are people within the Bitcoin world who try to make sure their payments are private. And so that's a more advanced discussion, but that's rightfully something that has to be mentioned as, a concern that people might share, that they don't necessarily want to link their Bitcoin transactions with their real world identity. And they will take steps to try to preserve that distance, if you will, and create an ability for them to use Bitcoin to buy things that they don't necessarily want people to know that they bought. I mean, it could be something like you want to protect your privacy and you might buy a VPN service and you might pay for that with Bitcoin. So that's one example there.
So it sounds like Bitcoiners are like an underground group of anarchists and rebels trying to keep away from the government, away from understanding exactly what they're doing.
So look, I won't deny there are some people like that. Bitcoin is a broad church, if you will, and you don't necessarily have to be an anarchist to use Bitcoin, because we think of it more like Bitcoin is just a stronger money. It's a superior money, and people will just adopt it over time because it's a harder money. It's a more scarce money. Now, another few examples I could present are people who are coming from more like a journalist perspective, and they are trying to expose, let's say, wrongdoing or corruption in the country that they live in, and that they have a need for a payment system of last resort, and so they would also use Bitcoin. And then there's a whole range of people who come from the more sort of white market world of, it's like fully, compliant everything Bitcoin. So there's a big range of people who are in Bitcoin. It's not only, privacy activists, let's say.
Okay, cool. So I'm going to buy some. I'm going to go onto an exchange. I'm going to get myself some Bitcoin. I'm going to go and check out Kraken. And while I'm there, I did notice there's a few coins. There's a few things I can buy. I noticed there's a few things called Bitcoin. There's a Bitcoin Cash. I noticed there's a thing called Ethereum. Like, a lot of them seem cheaper. Bitcoin's gone up quite high now. So I'm thinking perhaps I might try and invest in some of these other ones. What do you think about that, Stephan?
Right. And so here I would think of it like there's a lot of what we might term cargo cult, right? So there are people who try to mimic certain aspects of Bitcoin and then pass off their coin as though it was Bitcoin or superior to Bitcoin or cheaper than Bitcoin, right? And so to explain the analogy, I think there were some islands in the Pacific, and like during wartime, American planes would land there and drop supplies and so on. And then later, after the war had ended, they would try to almost invoke the planes to come back by setting up a fake runway or a fake hut or like a fake, air traffic guy. Because in their minds, they thought just by recreating this thing that, the planes would come and drop supplies and so on. But they didn't understand the war was over, right? And so in the same way, some of these alternative coins, they have tried to copy certain components of Bitcoin and pretend like they're all part of the same industry and they're all, that they too are like Bitcoin, but they're just fundamentally not. Now, a few key reasons. They typically tend to have a more centralized development process, or they might have what we might term a benevolent dictator, quotation marks. That person who can drive development and they can just sort of put their foot down and say, no, this is what we're developing, we're going this direction. They might have certain angles of centralization where, let's say, the US government could come to the Ethereum Foundation and just try to lay down the law, right? And try to say, no, when we don't want you to transact or permit the transaction between this person and that person. And so another thing that some of these alternative coins have done is make a certain trade-off on security without necessarily telling the people who are being marketed to, right? So they might say, oh, look, we've got faster block times, we've got faster transactions, without also saying that actually they traded off security in order to get that. And so my suggestion would be just stick to Bitcoin and learn and read about Bitcoin first. And the reason for that is, those reasons I mentioned earlier, but also that there's a lot of churn in this space, right? So if you look at the top 10 leaderboard, 5 years ago, it was very different. Only Bitcoin has remained at the top, whereas a lot of those other coins have gone in and out. And part of that comes back to this concept of network effects. So with Bitcoin, Trace Mayer talks about this, and other people mention it as well. Bitcoin just has the strongest network effects. So other people can try to copy certain aspects of it, but fundamentally, it just kind of coalesces back towards the best one. And that is measured not just in terms of technology, but also as a money. So that's one way to think about it. And some of those aspects on which that happens is things like liquidity. Right, so Bitcoin actually has the best liquidity out of all of the cryptocurrencies, quote unquote, and it also has a strong number of developers, a good number of users, transactions, miners who are securing it. There's more exchanges, and there are more merchants who accept payment in Bitcoin as well. So that's part of it as well, because when you buy when you're buying something that you want it to be a money, you want to care about who else is the network that I could transact with for that money. And so Bitcoin has the biggest one for that of all the cryptocurrencies, so to speak.
Right. Okay. So you're saying keep away from them because they don't really have the effect, they don't have the network effects of Bitcoin. They're not decentralized like Bitcoin. So ultimately, if you're speculating, it's a much higher risk of speculation.
Exactly, right? And so I would agree with that.
What about my mate Dave, who said he invested in all these ICOs and he bought into all these ICOs and made a bunch of money? Should I also be investing in ICOs or should I avoid them?
So obviously I would avoid. There have been many, many scams in the space, and in reality, many of these ICOs have tried to market themselves as being... and maybe not even intentionally, but they just try to give off this impression that, hey, you might have missed the boat on Bitcoin. It's too late for that, but you can get it on the ground floor with this one. So do that. And what happens is a lot of people don't realize that actually in these ICOs, there's like groups dumping onto other groups, right? And so there's like insider groups who get the real better price, and then they're dumping their bags, so to speak, on the next layer down, and then they're dumping on the next layer down. And so that is why I would caution very carefully against ICO investment and really learn and understand a bit more about Bitcoin before you try to branch out.
Wow, there's been a lot here, Stephan. And I was going to ask you about Austrian economics and libertarianism, but I think that might be a step too far for today. So we might do that one separate. Perhaps I'll point them in the direction of the show we made about that. But this has been amazing. There's been so much here. I want to take a step further. What are the things I should do now? Tell me what to do now after this show.
Right, so I would say, like you said, you want to just get a small amount of Bitcoin just to get some skin in the game, so to speak. And then there's a bunch of resources in the Bitcoin community. Obviously, there's your podcast, there's my podcast, a few good books that are good to read as well. So a few books that I typically recommend. One is The Little Bitcoin Book. Another one is Inventing Bitcoin by Jan Pritzker. The Bitcoin Standard by Safety Namus. Those are some resources that I would point them to. And then I would point the listeners towards getting a hardware wallet. I think that's a good step to take as well. But again, it's a journey, and you don't have to, we're not expecting you to be a hero straight away, right? You just have to build your way up to that.
And if I'm feeling nervous, if I'm feeling like, God, there's so much I've got to take in here, any advice for me?
I would suggest going to your local Bitcoin meetup. I think that's probably the best way that you can meet someone in person, and typically if there's a Bitcoiner there at that meetup, they can point you in the right direction and give you some resources, give you some in-person coaching. Otherwise, you can find, some coaching online, or you can find, podcasts and YouTube and articles and books. But I would say probably your best bet is actually going to a local Bitcoin meetup if you've got one in your city.
Fantastic. Well, Stephan, thank you for coming on. I know this is a very different show from a normal one. Appreciate your help in keeping this simple for everyone. I will share out your show in the show notes and advise people to go and follow you on Twitter as well. And thank you for this.
Thanks very much for having me, Peter. It was a pleasure.
All right, so what did you make of that one? I think this is a really important show in the beginner's guide, because Bitcoin can mean so many things to so many different people, so many different reasons to use it or different ways to use it. And it's because it's censorship resistant, because it's decentralized, and because it's trustless, it is enabling these new use cases for money. Now, if you did find this tricky to follow, don't worry. We all struggle in the beginning. It really is now time to just dive in. Get yourself dirty with some Bitcoin, go and buy some, move it around, have a play with some wallets. By playing with it, a lot more of it will become clear. And also, do check out the show notes. There's a bunch of stuff in there to help you go down the rabbit hole. Also, go to my website, check everything out on there. Go to Stephan's podcast as well. Check all these things out. There's so many resources to help you. Now, Stephan was great at going through this and breaking down why Bitcoin is so important. So thanks, as always, to him for coming on the show. On Friday, I've got part 5 of the beginner's guide, and we're going to be looking at the history of Bitcoin with your boy Marley Bent, going through some of the key events that shape Bitcoin and why they're important, why you need to know about them. Anyway, I hope you enjoyed this. If you got any feedback, if you've got any questions, you can reach out to me. My email address is hello@whatbitcoindid.com. Also, if you want to support the show, head over to my website. Go to whatbitcoindid.com. Click on the support section. That will explain everything you can do. It doesn't matter whether you leave a review or you want to become a sponsor. Whatever you want to do, if it helps the show, it helps me, so I appreciate you. All right, as I said, you want to reach out, my email address is hello@whatbitcoindid.com, and have a great week.